In today's video, we're analyzing the EURUSD as it rotates lower aggressively following that Monday US holiday, and also the DXY reclaims a significant level. I have the key levels to watch in today's video. Also, one specific level to watch as we head into Wednesday's session that could produce an opportunity, and also some potential targets in September. Now, if you guys do want my help with your trading, including seeing my trades live, then be sure to check out the link in the description of this video for 85% off lifetime access to VIP. Alternatively, you can sign up with Blueberry Markets, deposit $5,000 or more, and I will grant you lifetime access to our VIP group in Discord. That also includes full access to the course. You're going to get VIP-only videos. You're also going to see my trades in real time and also daily setups and commentary. So anyway, guys, looking here at the EURUSD, right? 4-hour time frame, we can see that obviously we got this very aggressive sell-off here following the US holiday. So very thin trading conditions on Monday here. Okay, so this period right through here, we did see very thin conditions for this market, across the market. And you can see we're on Tuesday, we are getting an aggressive sell-off here from the euro. Now, if you guys saw recent videos, then you should be aware of, first of all, we have this trend line off of this high from back here in July. So you can see that on the 4-hour time frame, we have this trend line off of these highs. And what happened here on Monday, despite the fact that we did see very thin conditions, you can see that on the 4-hour time frame, what we had here was a failed breakout. So on the 4-hour, we got to close above, close back below, retest as new resistance. So if you're in the VIP group, or if you join the VIP group, this is the kind of stuff that I teach there. This was a textbook failed breakout. So what you would do here is you would wait for the close above, wait for the close back below, and then sell or short on this retest here around 117.16. Now, as you can see, that would have been a nice short opportunity here down here toward the support level, which we've also discussed in recent videos as well. And if I move out here toward the daily and zoom out, you can see where this level comes off of that low from back here in February. Okay, so that was the late February low right there. You can see we've got lows across this trend line here. And also what I discussed in recent videos too, guys, was the fact that this lower wick down here from that Wednesday candle, a lot of times markets do fill in long upper or lower wicks like this on the high time frames. And you can see that that was certainly the case here. Okay, so we had this lower wick back here on this candle, and today's session so far is filling that in, okay, so to speak. So we do have the euro coming off of support down here. That's important to keep in mind. This is not, in my opinion, the time to be getting bearish on this market. Again, if you were looking for a short here, in my opinion, this up here, okay, this retest here following that failed breakout on the 4-hour was the place to do it. Okay, now that we're coming off of support, there is that potential for some relief here, like we've seen during this current 4-hour candle, which closes here in a few minutes. But the one thing to keep in mind here too is if we go toward the 30-minute time frame and turn on TPO, time price opportunity, this is an indicator that I've really grown to love. And I also have a video in the VIP group as well, teaching exactly how to use this indicator. It's about 27 minutes long, so it's very comprehensive. And I also reference this stuff all the time in Discord as well with members. But you can see that we have this single print, this blue line up here. So what this is this is a single print, okay, or imbalance in the market, where you can see that off of this low down here, we had the market ranging back here. We had an expansion out of this range, and this was very aggressive. It was very thinly traded through this 116.85 area. Now, this recent high came close to that mark, but not quite. And we now have the euro coming back here into this support area, this congestion back here. So there is the potential on Wednesday that we do get a bounce here from the euro, potentially from down here in this region, for that move back here to take out this single print. Now, there's no guarantee that we do see this because markets can leave these areas open. And, you know, look no further than if I move out here, turn this off to clean things up, and go back here to the 4-hour time frame, move out, you can see where all the way back here, we do have a single print back here as well, off of this very aggressive move that the market never came back to, at least not yet. Okay, so the point here is that there is no guarantee that the euro is going to come up here and clean up this single print. However, at the same time, in my opinion, again, never financial advice, but if you're looking at the daily chart, you can see where if the euro were to close like this, what you have here is you have this imbalance, this single print around 116.85. You also have this low here from Monday. So you have both a TPO single print. You also have a potential fair value gap forming there off of that Monday low in that same area. And a lot of times these do get filled in. Okay, so what you could see here is if this is going to be a reversal from the euro, you could see the market, you know, on Wednesday or Thursday come up here, take out this area. This serves as resistance and then get that rotation lower. Okay. But the bottom line is, like we've discussed in recent videos, this is a range-bound market. Okay, it's very important to understand here that I am not calling for, you know, a move higher or lower just yet out of this range, because we have to respect what's on the chart. so far this up here is resistance, and you've got support coming off of that trend line down here as well. Okay, so really just a range-bound market, guys. It's best to play this as a range until we get a breakout one way or the other. But again, this is going to be your support area down here. You've got that single print up here in this area, also potential fair value gap coming up in that 116.85 region. Okay, now one last note though before we move on to the DXY, just to kind of give you some kind of idea what we could get here over the coming days. And again, no guarantees of this, of course, but what we tend to see with moves like this here, this failed breakout, even though this was on a 4-hour time frame and also a US holiday, what we tend to see with moves like this here, this failed breakout, is you do get the market, in this case, ranging here for a bit, but these tend to signal potentially, extensive moves in the opposite direction. So this was a failed bullish breakout. So what we could see here is if the euro comes up here in this area and it serves as resistance, we could then get that push lower over the coming days down here toward this poor low, this unfinished auction around 115.64, and then potentially even the single print all the way down there around 114.40 or so from all the way back there in early August. Okay, but a couple things have to happen for that. First of all, I would like to see the euro come up here, take out this area, test resistance over the coming days, sweep this current 4-hour high, and then again, it also has to get below trend lines like this. Okay, so that's important to understand here. Again, we have to respect what's on the chart, and right now we do have a range-bound market. Okay, so let's take a look now at the DXY here. And as always, guys, if this is helping, if you're enjoying the content, be sure to subscribe to the channel. Also hit that like button. So looking at the DXY, very similar to what we've seen from the euro. And you can see here where we actually had Monday closing, even though the market closed right there at 97.7 support that we've discussed, you can see where we have this trend line off of that closing price from July that we've also discussed. And you have the DXY actually closing below and now potentially closing back above. So what this means here is that this is a potential bullish reclaim. Now, at the same time, though, like the euro, we do have some imbalances that have developed down here in this region. Okay, so in my opinion, if you're looking for a buy here on the US dollar, if you're treating this as a potential buy signal, in my opinion, you want to look for that pullback first, especially considering the fact that the market is coming off of this resistance that we've also discussed around 98.50/60. So this, in my opinion, is not the time to be getting bullish. You want to see some type of pullback here first to clean up those imbalances. The same thing with the EURUSD. Okay, now if we move out here and put some context behind this, what I have talked about in recent videos is the fact that we have several what are called poor lows down here, unfinished auctions. It looked like at the time, based on the market profile off of these lows, that it did look like sellers were not finished at the time. So you have this area down here at 97.43 or so, and then those areas down there around 96.70. So this level right here, this diagonal across here as well, that's your 2011 channel support that we've mentioned, or I've mentioned here on these videos. So this is still, in play in September if we get the move lower. But for right now, it does look relatively bullish here for the US dollar with that reclaim following Monday's drop below this trend line. Okay, so basically bottom line here for the DXY is this area around 97.90 or so flips to new support. You've got resistance up there at 98.60. Now, a sustained break above 98.60, you've got the top of this descending channel here. So you can see off of these highs, we've got this descending channel. This is a parallel channel off of these lows as well. And you've got this level coming in up here right around 99.35. Now, this is important because these are the highs from June. This was also the area that the DXY failed to hold above back here in this area. So as we discussed at the time, what happened here was we got the close above, we had the close back below, and now we have yet to have a retest of this level. Like I've mentioned in recent videos, guys, this candle, this wick that you see right here, the market was never here. This wick right here is actually a trading view error. They haven't cleaned it up yet. They haven't fixed it yet. But the market, the DXY, was never up here around 99.35. So basically what we've had is we had this failed breakout back here above 99.35. We had a partial retrace through here, and then we've seen the DXY just consolidate down here in this area. So that's important to understand too, because you have this area back here. Okay, what's going to be a confluence of resistance if we see the DXY get up here, following that failed breakout back here in this region, right? So we could see the DXY climb above these highs back here over the coming sessions, and then give us that 99.35 up toward about 99.5, tag as resistance. Okay, but again, for now, we have the market range bound. 98.6 is resistance. You've got support coming in down here off of this high from Monday around 97.90. Okay, so very range bound for now. No surprise there, considering it is essentially the inverse of the EURUSD. But I wanted to point that out because we have talked about this trend line off of that July closing price back here that could become a factor now over the coming days as new support for the DXY. All right, so looking at the euro, once again, just to wrap up, we do have the market holding above support down here. Again, I think this is the wrong time to be getting bearish. If you were getting bearish here, this was the place to do it following that failed breakout. We have a single print up here above the current 4-hour high, or the last 4-hour high, I should say now, and that comes in right around 116.85. That could become a factor. Okay, so you've got support down here off of that February 2025 trend line. You've got resistance up here off of that single print and potential fair value gap as we head into Wednesday around 116.85. All right, guys, that's it for today's video. I hope it helped. If it did, be sure to subscribe to the channel, hit that like button. Also, join us in VIP. Check out the link in the description of this video. I will see you on the inside. Trade well out there, and I will talk to you again tomorrow.